Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me Anuj and Surabhi. Well, there's some peace and quiet, at least there are no airstrikes. But today will be the day, the aftermath. What did we gain yesterday or gain in terms of information? The market has ended closer to its highs yesterday than to its lows. Perhaps one lesson the market drew is that this is a limited warning, perhaps, to terrorist forces. It doesn't look like a protracted, long, costly war. The market is certainly working with that assumption as of now. The second assumption it appears to work with is that this has certainly strengthened the hands of the current ruling dispensations. The chance of a Modi-led government coming back improves after the events since February 14th up to yesterday. That could be one reason why you saw the market move a good 100 points from the day's lows. Now, that's as far as the war theatre is concerned. My sense is that while there is news of a heavy exchange of artillery on the border right now, overnight, probably this news will die out and the market today will concentrate back on the fundamentals. And the fundamentals are DHFL, debt markets, fiscal deficit, auto sales, GDP. Chances are today we are going to talk more economics and business than we will talk politics. So just to put a few things that the market might worry about once the smoke of airstrikes is out, it will concentrate on fiscal deficit data. It will concentrate on DHFL news, not very bad actually. The DHFL downgrade was only for near-term paper, so that perhaps will be overlooked. We will start now looking for the auto sales data on March 1st. So back to business?
I guess it is back to business. Good morning, Lata. Good morning, Anuj. And as far as business cues are concerned, I guess we're not that bad this morning off. Most of Asia is holding out actually in positive territory. That's the SGX view, holding on to gains of about 35 points. For what it's worth, right now, oil prices are still range-bound. They've started a bit of a climb back after falling to 65. That's the big worry point, I guess, for us. If OPEC is indeed going to ignore whatever the US president said and keep reducing production and therefore elevating prices, and that becomes, of course, a watch point for us. Overnight action, flattish close on the Dow as well. Anuj, now, where does this leave us? Because this one big event of yesterday, assuming that that's out of the way, we're back in that trading range. We're back to asking ourselves whether the mid-cap market is pretty much towards the end of that selling pressure, selling pain. So do we go back to looking at, what, 10,950 today?
Morning, Surabhi. Perhaps we do, but look, 2 or 3 points just to carry forward the point Lata made. And, I was making this point yesterday. There's a parallel Satta Bazaar which gets the, elections right more than any opinion and exit poll. The going rate over the last 2 months for the BJP was 200, sorry. That's gone up to 250. And, look, the point is yesterday was a bit of a full toss early in the morning. And, first our panic. And, our channel is watched by retail. And that is why, I was making this point when the markets opened that the cute trades of, shorting yesterday may work for professional traders. But from the retail point of view, the best trade was to let the noise just settle down yesterday. And when the market made clearly a bit of a low, to play for that recovery, because the market is in overall a buy on dips kind of mood. So you have to buy panics in this market. Obviously, you don't want to be the first to buy. You just want to see when the market sort of gives you an indication that it's bottomed out. Then you buy. If you did that yesterday, you made a lot of money and you should be happy. Now for today, yesterday's high of 10,888 and low of 10,730 are the key markers as far as Nifty is concerned. The Bank Nifty is once again defended its 200-day moving average. Tomorrow we have expiry, so let's see if the lows are defended. Perhaps there could be some more short covering. But the key point is even yesterday also, the good quality mid-caps, they continue to make higher bottoms. You have stocks like Bharat Forge, for example, where you've seen some buying. Motherson Sumi has seen a lot of buying over the last few days. Shriram Transport Finance yesterday was a good stock. V-Guard. I can point out many names. Tata Communications started moving up. So normally, the trending move happens on Wednesday. Tomorrow's expiry, of course. So today, trending day is possible, but for that to happen, you need to take out yesterday's high and trade above that. That, I think, is the only trade, if at all. I don't think shorting this market is a trade. That may work out, but that's not a logical trade right now.
Okay, fair enough. So that's on the trading front. Of course, in terms of fresh triggers, along with oil prices, We'll also be looking at lots of macro numbers. GDP print will be coming in for the December quarter. And Lata, yesterday we had the fiscal deficit numbers come through. Now 120% or somewhere thereabouts for the full year target. Should we be worried, because these are hindsight numbers? I mean, we've already sort of spoken about the print for last year.
We've not spoken about 120, but actually fiscal deficit number does tend to be higher in December, Jan, because the advance taxes are paid in March. So they usually square off. That's the bigger problem, is the way in which tax collections are lagging. I mean, what is the full year estimate? 14.84. What have we done in the first 10 months? 10.2. Will we ever be able to make up 30% in 2 months? I mean, we are so far falling short of tax collections, it's not even funny. Likewise, CapEx. CapEx, the budget estimate, revised budget estimate is 3.1 lakh crore. What have we done in 10 months? 2.3 lakh crore. Are we going to make up 28% of the shortfall, or almost 30%, in a matter of 2 months? We won't. Now, all these are speed breakers to growth. If you don't collect enough taxes, and as it is, there is an extra commitment of expenditure in terms of the farm incomes, which is already coming in this year's budget, and you're not able to get into this kind of a capex investment, you're falling so far short. All these are negatives for growth. Of course, you will get March 1 data, but debt markets and deficits are in a very, very bad situation. Nobody wants to buy Indian government bonds. In spite of the rate cut, your 10-year is continuing to remain at 7.5, 7.6, because of exactly this fear. The government is not earning enough, and it is not spending in the right area. It's not spending in capex, which increases productivity. It is spending in other areas. And so that way there is a long-term negative, or a medium-term negative for the debt markets from these numbers.
Okay, let's see how the market reacts to these numbers as well, whether there's further pressure on the yield today.